Hey, so I wanted to give a trade recap on the trade that I took this morning. I actually did a live trade this morning at 9:30 or so Eastern, and I posted it on the YouTube and I posted it in the Discord, and I just wanted to talk through the trade. I actually talked through the trade a little bit on the live once things were kind of moving, but I wanted to just do a quick video that focuses on the trade recap and why I took the trade. Just being candid and being open about trading, I am learning so much in the process. So I'm not super consistent, and I'm not like an old dog 30-year trainer who does the same thing over and over again. I kind of go with the flow of how things move. And one thing that I'm learning is bias. You cannot be married to your bias. Being married to my bias actually gives me blindness. It really does. I all of a sudden can't see what price is trying to do. Then I get all lost and then upset that I didn't pay attention. So this is what happened. I woke up this morning. Well, I opened up the chart and it was like 9:25. So this is 8:30. Or let me speak in Central Time because that's what I'm in. 8:30 Central, 9:30 Eastern. So 8:30 to 9:30, I like to mark these out as my pre-market. I like to see what price is doing because I look at key levels. I'm a key level, liquidity, order block, breaker block, fair value gap type of trader, if that makes any sense. And so what I always look for, and I use this indicator to show my London low, London high, Asia low, Asia high. And you're seeing here that this is my London low, meaning the lowest point that London was in. And in the pre-market, price got lower than London. When I think about liquidity and I think about key levels, I know that price has a really high opportunity or probability to reverse from this key level. Like once it comes to this area, it's so ready to go back in the opposite direction. And some of the things that I look for that would be an order block. Sometimes I look for a break, a fair value gap. This time I looked for an order block. So it's not the perfect order block, but it's a pretty nice size dark candle right here at 9:31. And at 9:32, we've got this nice long light green candle. Light green for me is bullish, dark green is bearish. We've got this really nice light green candle, which is cool. So I just went ahead and drew my little blue box on that dark green. And my goal is that anytime price candles move up and enter back into this space and choose not to leave a body closure beneath this space or outside of this box, but just a wick or nothing at all and goes back in the up direction, then it's honoring this block. And that's all I needed. The other thing, when I said I don't look at biases, I look at price action. So again, looking merely at just this area right here from 8:30 to 9:30, price is going down, and there's a key level here. So for me, common sense just dictates price is going to have to manipulate off of this and reverse. For how long? Who knows? But I know, okay, based on price mobility, when I zoom out a little bit, and I know my chart looks wild, but I will go ahead and let me hide it all. So just remember that this is 9:30 somewhere over here. 9:30 is over here. And the London low is somewhere over here, and pre-market has come down underneath it. So I'm expecting it to reverse. It's important for me to know where to enter, but it's also really important for me to know when to get out. Before I even entered into this trade, the reason why I looked for a bullish move is because of this emptiness right here. This long singular, like, is that a news candle type of move? And there is absolutely no other candles that are in this wide space. If you see this long line here, there is nothing, right? In my live, I drew like a zigzag. Like there are no candles to come up here. And I've taught before that price is magnetized to itself. If it goes away from itself, it's eventually gonna come back to itself. And so I kept thinking, okay, I think price has a really great opportunity to come here. I didn't care if the day was bearish or bullish or what have you. I knew there was an opportunity for that. I also focused on consequent encroachment for opening range gap. So I looked at the regular time range from the day before, which is Wednesday at 4:14 p.m. I marked the line there, which is like this purple line here. And then I marked another purple line, which I think is somewhere up here. And somewhere in the middle of the two, I get to draw this orange line, which is an open, which I mark as open consequent encroachment. It's halfway mark between price closing on Wednesday and price opening on Thursday. The 50% mark, you can use the equilibrium line to do this. Is what I do. That gives me an idea of what I expect price to do. I expect price to come back up at some point and tap that consequent encroachment, surpass it, acknowledge it, reverse off if it's something, acknowledge it. And I think it was somewhere up here. That gave me better understanding to think, okay, I'm gonna look for something up here. And then thinking about how there is this gap with no candles in it, I'm definitely seeking that out. So price or market opens, we've got this dark candle, it's beautiful, it went down, it took out this London low right here, that's wonderful. We have a really large light green candle here, cool, that gives me the confidence to think we're definitely wanting to go up. But of course you have the stagnation, price kind of goes into this space, and that's cool, that's what you want. For me, when price enters into this space, I enter into this trade. Is it possible that price may close underneath and go completely down? 100%. But this is my strategy. When price gets into this space, I enter into this trade. I enter into 10 contracts and I'm ready to go up. The reason why I stay into this trade is because when I look at this dash line, I see no bodies beneath it. I see only wicks. That lets me know that price is not really trying to be there, but it can show you that it has been there, but it didn't stay. The other reason why I continued to stay in this trade was because I saw that it had a low here and a higher low. So in my mind, we're trying to go upward. This is evidence. Even though right here, we're making lower highs, right? High, lower high, yes. But when I look at this box, which is the key, the order block, this box is important to me. This is the most important thing to me. Time is also the most important thing as well. And I'm in the right time, but I also have to look at my order block. If price closes up, beneath this at any point, I'm out. Where I entered, I technically entered just above this line. It wasn't perfect. I wish I would have entered somewhere here or set a limit order and said if price hits this middle mean threshold or a consequent encroachment, whatever it's called, this halfway line, just go ahead and put me into 10 contracts. I'm practicing on limit orders. I'm more comfortable with the market. So that's what happened. Price got in here. I didn't catch it on time. It reversed a little bit. I entered into 10 or 12 contracts. And mind you, I'm entering into both my personal account on Tradovate and I'm entering into my prop firm account on, what am I on? Top Step, yeah. So I entered in here, and of course we get this nice light green candle up. So I'm like, okay, we're moving. Then we get this reverse back, and we get this dark candle that ticks here. I like to keep, because it's NASDAQ is super volatile. I don't keep my stops that close. At least I try not to. I try to give some gap. So my stop loss was somewhere here, maybe even down here at this regular time. This is open range gap, but it's a closed time from the 14th. So my line was somewhere here that price could stop me out. And price digs into the space once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times. And on this candle, 951, price closes above, and 952, price continues to stay above. And so we stayed. Now I took partial somewhere in between all of this. Again, on my live, I have it more detailed out. And again, I knew when to enter, but the more important question is when to get out. And my get out was going to be the middle line of the consequent encroachment of this gap that I already acknowledged needed to, price needed to come back to, because price is addicted or attracted to itself. It's going to have to come back to itself, especially when it sees this liquidity pool or this, what's it called? I forget the other term. Anyways, it's lacking. It's liquidity pool. I can say that. So price went into that space, ticked off really well, and I took partials. And when price made this green, when price started making these consistent dark green, I was like, yeah, let me get out. So for that, I was able to, this does not show it, but I was able to secure like $1,901, $1,900, which was cool. And Tradovate, I was able to get about 800. I'm not Tradovate. Top Step, I was able to get about 800.